let's talk about something that gets everyone fired up. How the super rich seem to pay so little in taxes. You see the headlines, right? And you probably think it's all about cheating the system. But the real story, well, it's something completely different and honestly, way more interesting. What if I told you that for the most part, the wealthiest people aren't breaking the law at all? That the whole idea of them finding sneaky, illegal loopholes isn't really the main event? That's the secret right there. They're not breaking the rules. They just understand the rulebook so incredibly well that they can play a totally different game than the rest of us. And that's my promise to you in this explainer. We're going to break down exactly how they do it. And I guarantee by the end of this, you will see wealth and taxes in a completely new light. It's a crazy thought, isn't it? But it's often true. Every single year, people working 9 to 5 jobs can pay a higher percentage in tax than some billionaires. And it's not because those billionaires are committing fraud. It's because our tax system is fundamentally built to favor a certain type of money. Okay, so here's the first thing you absolutely have to understand. Not all income is created equal in the eyes of the IRS. There are basically two separate systems, and the one you're in all comes down to how you make your money. So let me ask you this, just to get your brain working. What is the single biggest difference between the salary you get from your job and the way a billionaire builds their fortune? Because the answer to that question changes everything. And boom, here it is. Most of us operate on earned income. That's your salary, right? The money you get for trading your time and your labor. That money gets taxed at the highest rates, and it's taken out of your paycheck before you even get to touch it. But the wealthy? They live on investment income. That's money their assets make for them. And that income is taxed at way lower rates, and, this is the kicker, they get to control when they pay those taxes. So what exactly are these magical assets? Well, we're talking about the big stuff, things that grow in value all by themselves. We're talking about huge stock portfolios, owning entire businesses, and of course, massive amounts of real estate. These are the engines that the entire tax code is designed to reward. Okay, so you've got the assets. Now what? This is where we get into what I like to call the owner's playbook. It's a set of strategies almost entirely for business and real estate owners that legally act like a giant tax shield for your money. This slide right here, this might be one of the most important concepts to grasp. As an employee, you earn $1, the government immediately takes its cut, and then you live on what's left. But as a business owner, you earn $1, you spend your money on everything you need to run and grow the business, and you only get taxed on the little bit of profit that's left at the very, very end. It's a total reversal of cash flow. And the stuff they can spend on before taxes? Oh man, we're talking about basically any legitimate business expense. A bad year where you lost money? That can lower your taxes. Buying new equipment or investing back into the company? That lowers your taxes. And then there's that amazing tool called depreciation. We'll get to that one. Now, you might be thinking, this all just sounds like a bunch of loopholes, but you have to understand the logic behind it. The government actually wants people to do this. These rules are incentives. They're designed to encourage people to start companies, to hire employees, to buy property, and to grow the economy. The rich are just playing the game the way it was designed to be played. Okay, so if owning a business is like having a tax shield, then owning real estate is like unlocking a tax superpower. Seriously, it has some completely unique advantages that make it the ultimate tool for building and protecting wealth. And here's that magic word again, depreciation. Now, this is where things get really wild. The tax code basically lets you pretend your building is losing value over time, even if, in the real world, it's actually worth more every year. So get this. Say you made $20,000 in profit from rent this year, but the government lets you claim a $20,000 paper loss from depreciation. Well, your real profit just got canceled out by your paper loss. The result? You have cash in your pocket, but on paper, it looks like you made $0. Zero profit means zero tax. It's insane, and it's perfectly legal. So we've covered how to reduce taxes on the money you make. But what about all those billions that are just sitting in assets, growing in value? If you sell those assets, you trigger a massive tax bill. So what's the move? Simple. You just don't sell. Instead, they use a legendary strategy some people call buy, borrow, die. It works like this. Step 1. Your assets, your stocks, your properties, they all go way up in value. Step 2, you go to a bank and take out a loan against that huge pile of value, usually at a super low interest rate. And step 3, you just live your life using that borrowed money. And this right here, this is the whole secret sauce. A loan is not considered income. The IRS literally doesn't see it as you making money. And if it's not income, you can't be taxed on it. You can pull out millions of dollars to live on tax-free, all while your original assets keep growing. It's absolutely brilliant. So we've gone through some pretty powerful tactics, but the real number one secret isn't any single one of these tricks. It's the mindset. It's the entire long-term strategy that connects all the dots. See, the wealthy aren't thinking about their taxes year to year. They're thinking in decades. The goal is always to push taxes off as far into the future as possible, to shift their money into categories that get taxed less. And they're not doing this themselves on TurboTax, you know? They have entire teams of the smartest lawyers and accountants in the world whose only job is to orchestrate this grand plan. And this really brings us back to the fundamental truth of it all. The tax system wasn't really designed to be fair. It's a giant machine of incentives designed to reward very specific actions: owning things, investing capital, and taking big financial risks. If all you ever do is trade your time for a paycheck, you are, by design, playing the game on the hardest difficulty setting. Which brings us to what I think is the most important takeaway of all. These strategies, these ideas, they aren't just for billionaires. The biggest advantage you can have isn't actually having millions of dollars, it's having the education. It's just knowing that this other way of doing things even exists. And look, this isn't about teaching you to be a tax cheat. Far from it. This is about understanding the rules of the game that you're already playing, whether you know it or not. Because playing a game without knowing the rules is a guaranteed way to lose. So, did this change how you think about all this? If it did, do me a quick favor. Hit that like button, and if you want a part 2 where we go even deeper, comment the word tax below. And of course, subscribe so you don't miss the next explainer where we break down these big systems. Because here's the final thought I'll leave you with. Once you truly understand how the system works, you can stop being angry at it and you can start figuring out how to make it work for you. Thanks for watching.